It's another edition of the Trading Tips video newsletter, teaching you how to become a successful trader in less than 5 minutes per week. The video newsletter is brought to you by TradingTips.com.
Welcome to this TradingTips.com video newsletter, How Society Programs Bad Traders, and How to Overcome This Bad Programming. Let's begin. Money management skills are the number one thing that separates successful and unsuccessful traders. And money management should be easy. The problem is, there are a lot of psychological issues preventing the simple theories of sound money management from transforming into the practices of sound money management. But before we go there, let's review exactly what we mean by money management. First, it means choosing an appropriate position size for each buy. Second, it means selecting an entry price for the position you want to enter and executing at that entry price or better. Third, it means establishing one or more price targets at which you will take profits. And finally, probably most importantly, it means setting a firm stop loss and sticking to it. This all sounds easy, doesn't it? But why then are so many traders unsuccessful? It's because for each element of money management discussed in the previous slide, there's at least one pitfall. When it comes to position size, too many traders want to be high rollers or whales, even if they have small accounts. They load up on one big bet at a time, and thus they're easily wiped out when something goes wrong. When it comes to using an entry price, either a limit order or a technical trigger should be used, but many investors chase after on-fire stocks and get burned in the process. When it comes to using price targets, there are two pitfalls: not taking profits when you have them, being greedy, or taking them too early, being petty. And finally, the number one problem unsuccessful traders have with money management is refusing to take losses. Why do traders refuse to take losses? Because we're taught to from an early age, in school and in society at large. Not in trading lessons, but in general principles we subconsciously apply to trading. Let me explain. From an early age, we learn that being right is good. The right answer on the test is good. The wrong answer on the test is bad. Being right is equated with success. Being wrong is equated with failure. As applied to trading, we then view profitable trades as right and unprofitable trades as wrong. This only makes sense. But here's the problem. If you're only concerned with not being wrong, then subconsciously you're discouraged from taking losses. You want to hold your losers until they're right. The trade isn't wrong until you take the loss, so you avoid it. This is a surefire way to lose lots of money. It's okay to be wrong. If you have a system that makes good stock picks and tells you to sell half of your winning position at a 12% profit and then close it out at a 17% profit, and to take losses at negative 8%, then you only have to be right 32% of the time in order to break even. And that's assuming that all of the wrong picks don't first hit that 12% target before going to negative 8%. In reality, you'd have to be right even less than 32% of the time to break even. By comparison, a system making the same picks but instructing a 10% price target and a negative 10% stop loss must be right more than 50% of the time in order to make money. This type of system misses out on big gains and actually needs to be right a lot more than it's wrong once you figure in the transaction costs. Since it's taking profits at 10% and not selling until negative 10%, it will be right more often than the other system, but the money it makes for you is likely to be much, much less. You have to decide if you'd rather be right or rich. Ken Jennings made a career of being right all the time. It allowed him to make a lot of money on Jeopardy, but there are tens if not hundreds of thousands of traders and investors who've made more. Warren Buffett made a career of making himself rich. He didn't care about always being right. You have to decide which example you'd rather follow. We hope you've enjoyed this TradingTips.com video newsletter. Thank you and good trading.
This Trading Tips video newsletter has been brought to you by Manny Bacchus's First Hour Trading System. Every day there's money to be made in the first hour of stock trading. This is the world of day trading, not for novices, unless you have a system. The First Hour Trading System. Visit firsthourtrading.com now and sign up for a free 30-day trial. You could make enough in the first hour of your day to take the rest of the day off. Do you want to view more Trading Tips videos? Visit tradingtips.com. sign up for our free video newsletters. Become a successful trader by visiting tradingtips.com.